Good morning, students. In this video, I'm going to discuss about the next topic, that is financial decision. Now, what are the major decisions taken by the financial management? So, in this video, I'm going to explain these decisions. Now, as you know that financial management play a very important role in any organization, and all the financial activities are directly or indirectly are affected by financial management. So the various objectives of financial management, I have already told you that the main objective of financial management is to increase the shareholder wealth, or apart from this the various other objectives are the financial management maintains the profit maximizations and maintenance of liquidities in the organizations and proper utilization of funds, along with the meeting of financial commitments with creditors, suppliers and lenders. So these are the basically the important objectives of financial management. Now the financial management takes the various decisions in the organization, and whatever the financial decision taken by the financial management, this will basically affect the earning capacity of the business. This will decide the future prospects of the organization. So the efficient management basically results in the success of business, and which improves the overall health of business organization. So in short, I can say that the success and the failure of any organization depends upon the decision of financial management which are being taken in organization. Now the main and foremost important objective of financial management is to maximize the wealth of equity shareholder, that I have already explained in the previous video. Now the question is that how the financial management basically maximize the wealth of equity shareholder. Now, as you know that when the price of shares in the market are keep on increasing, that means this indicates this maximize the wealth of equity shareholders. So when the price of shares in a market are keep on increasing, this is the good sign from shareholder point of view. And when the price of shares are increasing, so automatically the wealth of equity shareholders are also getting maximized. So when the price of shares are decreasing, then the wealth of the equity shareholders will come down, and which is not at all a good sign from equity shareholders point of view. So in order to one thing is clear, that the the shareholder wealth can be increased, can be increased if the price of shares are increasing, and if the price of shares are decreasing, then this will give, or this will brings the negative results in company. So in order to maintain to maximize the wealth of equity shareholders, the financial management basically takes the various decisions in organizations, which so that this increase the shareholder wealth can be maintained. So the various financial decisions which are being taken by the financial management is: number 1, investment decision; number 2, financing decision; number 3, dividend decisions. So these are the three major decisions, financial decision taken by the financial management. So the first decision is investment decision. So investment decision is also known as capital budgeting decision. So such investment decision is basically a very important decision, and which affects the future growth of the organizations. And this capital budgeting decisions also affects the long term growth of the company, and it also affects the future earning capacity of the company. So the investment decision is also known as capital budgeting decision. So as you know that the financial management also decides the size and the composition of fixed assets as well as the current assets. Now, fixed assets and current assets both are required in the business or in an organization in order to smooth functioning of organization. Now, in order to set up the business or any organization, we need a fixed assets and current assets also. So when we talk about the fixed assets, that means we are talking about land, building, plant, machinery, furnitures, and etc. So that means in order to start a business, these assets are also required. And in order to buy a land, in order to set up the factory, huge expenditures are involved. So as you know, the financial management basically is related with the acquisition and allocating of funds. That means proper utilization fund is also one of the activities of financial management. So in the investment decision, the financial management basically takes the various decisions related with the investment in fixed capital. So where to invest fixed capital, this decision is basically taken by financial management. Now, the in order to buy the land and land, building, plant, machinery, furniture, or in order to set up any factory and any um, any manufacturing unit, we need to invest huge amount in fixed assets. So in order to invest in fixed assets, we need to supply the funds in order to buy these assets. So this decision is basically comes under the capital budgeting decision. So this decision is basically affects the growth of uh, any organizations, and this also uh, affects the earning capacity of the business. Now, this decision is basically relates to careful selection of assets in which the funds will be invested by the firm. So basically, the firm has many options to invest their funds, but the firm has to select the most appropriate investment which brings the maximum benefits for the firm, and deciding or selecting the most appropriate proposal is investment decision. So that means the company has basically many options to invest the fund in a many investment uh, many investment criteria, having a many investment option. So in order to select the best option, the company has to take, or financial management has to take the various decision. So the firm invest its funds in acquiring the fixed assets as well as the current assets in order to set up any factory or any organization. So when the decisions regarding the fixed assets is taken, it is called capital budgeting decision. Now the question is that capital budgeting decision is basically very important decisions, because it involves various decisions which must be taken by financial management. Now the investment decisions are basically considered very important decisions, because of the following reasons. Number one, the investment decisions are basically a long-term decisions, and therefore it is these are not ir, irreversibles. So irreversible. Now once the decision is taken, it cannot be changed. Okay, because like if you are setting up any factory or any organization, then we need to invest amount in order to buy fixed assets. So in order to buy the fixed assets, we need to invest huge amount. Okay, so if that decision is basically a wrong decision, then it will be difficult for the organization. So before investing any amount in any project, then the financial management has to take various decisions. So because these are the basically very because in such type of projects various risks are also involved. So they are the basically long term decisions, and therefore they are irreversible. That means once the decision taken cannot be changed. Number two, it involves huge amount of fund, because since we are investing the amount in fixed assets as well as in current assets, so lot of investments are required, liquid cash are required in order to invest in order to invest. Now this whatever the decision is being taken, investment decision is being taken by the financial management, this also affects the earning capacity of the company. So these investment decisions are the very important decisions which must be taken by the financial management. Now the capital budgeting decisions are basically very important because of other points also, like the capital budgeting decisions basically affects the long term growth of the company, that you know very well, as the fund invested in the long term assets bring return in the future, and the future prospects and the growth of the company depends upon these decisions only. Now the investment in the long term projects or buying of fixed assets also involves huge amount of fund, and if any wrong proposal is selected, then it may result in wastage of a huge amount of funds. So that is why it is called capital budgeting uh, decision. Now in capital budgeting decision, the risk is also involved, because the capital budgeting decision involves the huge amount of funds, and also involves the big risk, because the returns basically comes in long run, means whatever the funds you are going to invest, so the funds are being invested by the financial management with the intention of getting some return. So this return is basically comes after certain period of time, so the company has to bear the risk for the long period of time till the return starts coming. So this decision is also a irreversible decision, because capital budgeting decisions cannot be reversed or changed over the night, as these decisions involve the huge funds and heavy cost, and going back or reversing the decisions may result in heavy losses and wastage of fund also. So this decision must be taken after careful planning and evaluating all the effects of decisions, because adverse decision consequences may be very heavy. So this is what the financial decision, and I hope you understood this point. Still, if you have any question in your mind, you can ask me in my live class. So in my next video I am going to explain you what is financial decision. Thank you.